I was broke watching candles in a dim lit room. Now the charts look like rockets when the green lines zoom. Every day like a whisper saying buy me soon. While the bears in the comments yelling market doom. I don't gamble with luck, I calculate the storm. Like a captain reading tides when the waves get warm. Volume spikes like thunder when the bell gets rung. And the tape starts singing like a loaded drum. Stop loss is tight like a seatbelt click. Why do weekends fold when the market gets slick? I've been studying patterns like a code in the sky. When the breakout hits, it's a king supply. Every red day just fuel for the climb. Every scar in the chart turn gold over time. If the market's a jungle, then I'm built to survive. Turn a spark in the trade to a fire in my life. Light it up, trade like king, yeah, yeah. 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 Trade like king. Market open like thunder when the bells scream loud. Got the wolves on the floor and the sharks in the crowd. But I move through the chaos like a ghost in the tape. Every wick tell a story, every level escape. Resistance like walls, but they crumble in time. When momentum comes rushing like a runaway rhyme. Every trade like a blade that I sharpen alone. Now the market paying rent on the throne I own. Light it up, trade like king, yeah, yeah. 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 Oh, trade like kings. Trade like king. Trade like kings.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where, folks, it is a beautiful Monday, March the 9th, I want to say. I think it's on the 9th, so that doesn't really matter at this point, to be completely honest. What matters is the stock market going to full-on crash today? If you look at what's going on in pre-market trading, there is a lot of red. The only thing that's green is oil and volatility, and the rest of us are getting left in the dust. So I want to be breaking down what's happening. I'm very excited to be back. I had a great time in Canada. I had a great time in Toronto. It's always a pleasure to be able to chit-chat with the CEO of Rumble. If you missed that interview, if you missed that sit-down, it is up. It's live. Feel free to watch it. Cool breakdown of what's happening with Rumble as a company. And as fun as that was, obviously, it's nice to be back here in the captain's chair as we're about to have craziness in the market. We gapped down when the futures market opened at 6 p.m. last night, vomited even more. We're getting a little bit of a recovery. Right now, I'm looking at a bit of pre-market stuff, and we're bouncing back to where the futures market opened. So we're very, very much in the red. I mean, the overall market is down in excess of 1%. And oil's up. Granted, it's not as high as it was, but yeah, like it's still up, and volatility's up too. So relative to where we closed out on Friday, things are worse. But relative to how bad it really got, like mid last night, well, things are improving a little bit. So basically we're returning to, let's call it the scene of the crime. The market opened last night, 6 p.m. Eastern on the Sunday. That's when the Globex session really gets started for futures. And it's going to lead us to a pretty crazy day. Yeah, from a technical perspective, we could chit chat about these upside gap fills on the SPY and the Qs, the downside gap fills on volatility and oil. Yeah, from a technical perspective, you could consider that. I could also push back and say, but don't forget the fact that, hey, we are in crazy times, potentially staring WW Trace in the face right now. So maybe we count this as a news-driven gap, which remember, the odds of news-driven gaps do drop. Just pure technical gaps, oh, they're obviously nice to play, but if you ask me, and I'm going to kind of prove it to you, at least the way I look at it, my mental framework of the market here, that the stability is low. According to SpotGam, it's 3%. Generally, you have a bit of support coming from zero DTE positioning. Not today. Today, it's all negative gamma. It's negative gamma above, below. That's not necessarily bearish, but it means get ready for large swings. So we've already been kind of mentally prepared over the past week, 2 weeks, 3 weeks for kind of craziness within the market per day. But honestly, I think today is going to be an even grander, a more grand example of how big ranges can really get. So I want everyone to get prepped up. Obviously, a brand new week, so hopefully you're disciplined, you stick to your plan, but more importantly than that is really respect your sizing. I was in the Goonie trading Discord just before this, and I guess the major tip I was giving them, and I want to give it to you folks as well, is this is not the time to be the hero and oversize or anything like that. It really isn't. This is the time where you're like, you gotta keep that sizing in check. And honestly, based on what the expected ranges are, I mean, go look at the money straddle here on options. Like, we're looking for big moves today. So of course, I'll be doing my normal spiel of like the key levels where the large money is positioned at, all that good jazz, so you can have more reasonable targets. But the TLDR is this. Right now, the price structure is obviously bearish. Price momentum is obviously bearish. Options flow is obviously bearish. Putting those three things together, right now, the bear camp is in control. And then when you consider what's going on in the price structure, well, not really, the price surface, we'll call it. Obviously, I'm referring to the negative gamma. It's bearish with the expectation of large ranges. Now, those large ranges could be bounces back to the upside. They could be plummets, continuation to the downside. So right now, personally, I'm coming into this with a bearish bias, but I'm being prepared in the short term, and we'll say something as short as like the 1 minute, 5 minute chart for large swings in both direction. So probably means very much size down. So I just want to put that out there to everyone that today's the texture of today, the setup of today, it's going to be a wild one. So we're going to see how this is going. Folks, I appreciate you tuning in to all those specialty shows last week and kind of putting up with a bit of a switch up. Thank you. I know sometimes it's fun to do that. Maybe it's a little bit more fun when the markets are quote unquote boring. This time around, it just happened when the markets were going nuts. I mean, a lot of you tuned into that, what was it, Friday morning stream at 8:30 where we got the jobs numbers and they were a gigantic mess. And actually they were a mess because they ended up missing growth of 50 to 60,000 and it was drop of 100. So it was off by like 300%. That was brutal. Oil was already going up. Remember, as oil goes higher and higher and higher, that's going to have direct implications on what's going on in the world of inflation. So inflation might be back on the menu. This is happening as we're heading into a midterm election year. And I know that's a little bit out and we have a bit more time on that front, but that's always going to make things a little bit more hectic, chaotic, volatile, if you will. So crazy to watch it. And like I said, I appreciate you guys tuning in. I'm very excited to be back. And as I get rocking here, a question for all of you. And I think I did figure out how to aggregate these chats together, which is awesome. Okay. First two questions. First of all, I'm getting messages, but I don't think they're telling me the truth. So on both chats, both on Rumble and on YouTube, could you guys please give me a quick thumbs up, thumbs down for stream quality? You should be able to watch this in either 2K or 4K. So whatever your personal plan is, and then also, I guess, just like what's going on with your own computer and your internet connection. So my first question is the stream coming through well, but is it also coming through at like the highest possible? Because this should be cooking in the realm of like 2K, 4K stream quality. All right, I'm seeing some thumbs up, thumbs up, thumbs up. Okay, cool. Please, we are trying a new propagator out right now, as in the thing that we're connecting my streaming software to, what sends that out to the rest of the world. We're now using the in-house one from Rumble. It's actually called Rumble Studio. So I was using that when I was at their physical studios, and they showed me how to get some things set up from a tech perspective. So I just wanted to make sure I did it properly, but it does seem like you guys are saying we have some good high quality. So that's awesome. And like I said, if something gets a little bit weird, just let me know and I'll see if I could change it, because I'm just myself getting kind of used to it. But I'm seeing resolution 1440, bit rate 15,000, frames per second 60, packet loss 0. We're ripping it already for 11 minutes, so that's looking good on my end. And then I guess my second question for all of you is, are you buying this dip now, or do you think that there's more pain to come? So pretty much I'm asking for today, Monday, March the 9th. Are you prepping up to buy the dip right now? You're like, this is it, BTFD? Or are you, no, there's a bit more pain and I'm just going to be waiting a couple days, or maybe you're waiting for potentially news developments from Iran, something like that, like between obviously the US and Iran. I kind of want to get an idea of the framework of where you guys are at. Watching only now, more pain, more to come, lots more pain. Auto trader testing on his recklessness, pain for sure, more pain, buy, but I'm prepared for more, waiting, more pain. Okay, so there was a few of you saying you're getting in right now, but a lot of you are more so like, hang on, I need a bit more data, a bit more time. And I have to admit, I'm in the camp of the latter. I too just want a little bit more clarity here. A little bit more clarity. Okay, cool. Well, on that particular note, let me switch things up so I could do my job, ideally to the best of my ability. Let's get that over here and show you guys what is up. Dow futures tumble nearly 600 points as oil tops 100 a barrel, raising in stagflation, which is inflation as the economy is going down. It's the worst kind of inflation, stagflation fears. So right now, the SPY is currently down 0.9%. The Qs are down 0.95. Volatility is up 5.5, and oil is currently trading at 100 a barrel, up 10% from where it closed out last week. So if you haven't seen the chart, yes, S&P 500, lower highs, lower lows, obviously getting a little bit cracked there, sweeping the lows here around that 6,800 level. Not so good. Like, we were flirting with it, we bounced up, we flirted with it again, and then officially cracked it on Friday. And if the market were to open at this exact moment, we would be 125 points south of it. We're slated to be opening roughly where my cursor is, roughly in this region, which means the next major support we're talking about is closer to 6550. So I just want to put that out there just in case today is one of those gigantic red bar days. Do I think it's going to be? I have no particular prediction. I'm more of attempting to react to the best of my ability. I'm not trying to come into this with a bias of, oh, I have to be going long. Oh, I have to be going short. I find that when I have a bias with it, that works about half of the time, because sometimes my bias is right and sometimes my bias is wrong, which is why I feel like as an active trader, a day trader, a scalp trader, something like that, it is honestly pointless to try to predict. I think prediction does have a place in long-term investing, but when you have a shorter time frame, there's, from a math perspective, the term is referred to as noise. There's just too much noise. There's just too much randomness. This could be horribly bearish, and yet you could still have a bullish day. Actually, we had 4 green days in a row, and yet we're still trending down. So remember, when it comes to short-term movement, I deeply, deeply, deeply believe there is really, it's a waste of time to be predicting. If you're predicting and you're right, hey, congrats to you. That's awesome. But I don't necessarily think that's going to be the end-all, be-all thing that helps you actually become a profitable trader. I think it's a lot more of reacting to the current setup up and carrying reasonable risk. But we could talk about that a little bit later from now, because as much as this looks a bit crazy with the S&P 500 getting hit, this looks a bit crazy with volatility ripping. Let me show you the craziest chart. Let's talk about black gold, aka oil. Not long ago, I'm talking mid-Feb, I'm talking the start of March, oil, literally to close out the month of February, was trading at 66 a barrel. We have now skyrocketed overnight, at one point getting as high as 119.48. Look at the rip. Folks, I want to be clear. We're talking about the end of February, as in not many days ago, a 78% pump. Obviously, at this point in time, it's up 47%, but we're talking about 1, 2, 3, 4, 5, 5.5, 6 trading days. Oil is ripping, and this is what happens when you have one of the largest supply crunches ever known to man. This is what happens when they shut down the strait, where a lot of oil is shipped, and people are saying, okay, if demand is staying the same and supply is plummeting, what happens to price? Well, price rips to kingdom come. So that just makes the cost of everything else higher, and eventually this will kind of trickle its way through the economy, and before you know it, anything that's using crude oil, well, those prices are going to be going up. So from a larger economic standpoint, that's what people are paying attention to. Obviously, in the short term, the overall equities market is a forward-looking mechanism, so it's already front-running it. SPX taking a hit. NDX taking a hit. I don't actually need this one at all. RTY, the small cap sector, taking a larger hit, but it's actually recovering a little bit this morning from where we opened, but overall it is down 1.3%. So it's actually the larger hit. DJI, let's look at the Dow. The Dow also taking a hit. So from the world of equities, it's been kind of going down ever since mid-Feb. Showing you crypto, it's actually kind of surprisingly flat. I wouldn't say a bullish or a bearish reaction. I would say the best way to really summarize what we're seeing over in the world of crypto is a lack of a reaction. If you want to look at some of these other things, the dollar is actually going up. If you want to look at gold, it's kind of chilling after a recent pop. Silver also chilling after a recent pop. So the real movement right now is specifically in oil. It's specifically in volatility, and it's specifically in equities. And I don't want to go too far off on a tangent here, but I need to show you something. I found this when doom scrolling on the internet yesterday. Did you guys know that live cattle is ripping like no other? And this is why I've always been pitching to you guys. You always want to store roughly 1 to 200 cows in your basement it's just a rainy day fund. I know sometimes people get a little bit bored, and I can feel your eyes gloss over when I'm trying to give you reasonable financial, just security. It's a rainy day fund. And this is why I've always pitched the concept. Just keep a mere 1 to 200 cattle, 1 to 200 heifers in your basement. You just never know. You just never know when you're going to need it. And I think it's environments like this that you're going to be really happy you heeded my advice. You're like, oh, thank God I have 150 heifers downstairs. Because days like this, you're going to feel like the richest man in Babylon. So just wanted to call that out. Like I said, I didn't want to get too distracted on the subject matter. We should return to the equities market. We could always circle back to cattle. Anyway, market's getting hit, and it's because of all the craziness in the Middle East. The long-feared Persian Gulf oil squeeze is upon us. Traffic through the strait has ground to a virtual halt, unleashing the most severe energy crisis since the 1970s and threatening the global economy. That's what happens when oil shoots up 75% in 1 week. And pairing that together with seasonality, not the best vibes. From the last 20 to 30 years worth of information, the seasonal bias of the start of March in the bottom left of your screen, which I am probably blocking. Let me switch myself up. You can see the seasonal bias from mid-Feb to the start of March is bearish. Then we bottom out roughly, and this is once again just average values, about 1/3 of the way through March, and then we pretty much rip until maybe mid-May. So April is a very bullish month, so I want to put that on your radar. Will seasonality seasonality play out this time? Well, your guess is as good as mine. Now, for those of you looking for more recent data, over the past 5 years and 3 years, March is bullish net the whole month. But when you look into the weekly, it shows a little bit of different information. So the week we're about to get into is actually a pretty bullish week, the one that we're about to start. So once again, that's more recent data instead of looking at a 20 to 30 year segment of data, just the past 3 to 5. So a little bit of conflicting info there. And maybe you could argue, does it even really matter this time, being as we just have the absolute craziness of what in the world's happening in the Middle East? That's a fair argument, but hey, I just want to give you the data on the situation. Speaking of which, Iran signals a fight to the end with the new appointment of the previous Ayatollah's son. So basically, the last Ayatollah who had a building fall on him, well, his son is now the guy running the show. So apparently there's quite a bit of tensions within the country itself, and looking at the civilians, looking at the military, and then obviously that's even like just strange across the board. So probably getting updates on this one today. But the most recent reporting is this guy right here with the glasses is the new guy in control. Iran's new supreme leader fights Trump, Israel, and anger at home. Delays in appointing him hint at tensions between the military and civilian leadership of the country. So right now, a lot of chaos, a lot of volatility, and it's not only being reflected in the, I guess, military political reports, but we're also like directly seeing it in the market. So wanted to keep you apprised of that big update. Yardini, I believe is how you say it, basically just an investment firm, a dude, Ed, raises odds of U.S. market meltdown to 35% on Iran war. So basically saying there is a 1 in 3 shot, a 1/3 chance, slightly more than that, that this whole ordeal causes a quote-unquote market meltdown. U.S. stocks are facing a growing risk of sharp sell-off this year as the escalating war in Iran hurts global markets. Yardini has raised the probability of a market meltdown to 35% for the rest of the year and slashed the odds of a melt up to 5%. What I don't like about this is there's not really a mathematical measuring definition of meltdown, of melt up. Like, is it one of those things that, like, if we go down at all, you could see, like, see, I was right. Or if we go up at all, be like, see, I was right. It's like the term meltdown and melt up, they don't have direct, I suppose, measurements of like, oh, this is the percentage measurement we're looking for. So when they say it, it kind of sounds big brain, it kind of sounds fancy. But then at the end of the day, at the end of the year, how would we actually measure this to know if the call out is quote unquote right or wrong? So just want to throw that out there. The U.S. economy and stock market are stuck between the increasing risk of higher inflation and rising unemployment, with the Fed's dual mandate being challenged by oil shock. So don't forget, as of May, we're going to have a new Fed chair. So that adds it, and this whole concept of the market loves to test the new Fed chair. And remember, the new guy coming in, it's a pretty hardcore hawk, so he doesn't like any inflation at all. And obviously, oil going up, that's going to directly cause inflation. Prices are going to go up at a higher velocity. So we have a new, like, hawkish chair coming in who probably is not going to want to cut rates, and in fact might want to raise the Fed fund rate, which is literally the polar opposite of what Trump has been saying. And remember, too slow, too dumb, just calling Powell basically a retard. So there's a lot going on here, a lot of movement. And hey, what a time to be a trader. What a time to be a trader. But since I am here kind of complaining about lack of measurement and odds, and I think we need those to be successful traders, let me hit you with something. These are the odds from Polymarket of the U.S. forces entering Iran by March 14th, as in about 5 days, 22%, not that likely. By the end of the month, about 50-50. So by the end of this calendar month, for those of you who believe in the Gregorian calendar, there's about a 50-50 shot. And then by the end of the year, there's actually more than a 2/3 shot of the U.S. forces entering Iran. So I want to like anchor us to this, and then we could come back to it every couple days to see how the odds are shifting. But what's more interesting is this. Will Iranian regime fall by June 30th? So basically, as we're just about to be putting on our sunscreen and enjoying our time by the pool, 32% chance of the regime falling. Obviously, if you go further out, the odds do increase up to 41. And then if you bring it back to a closer time, only 8% chance of falling by the end of this month. So even if we give it some serious time, I'm going all the way out to December there, only a 2 in 5 shot, a 4 in 10 chance of the quote unquote Iranian regime falling before 2027. And then one final one just to drive this point home. the U.S.-Iran ceasefire by, well, this is probably the most important one. When are we going to have a ceasefire with Iran? And as of right now, we are unfortunately kind of looking a little bit closer to the summer timeframe. The chance of it being resolved this week, 7%. The end of this month, only a 1 in 4 shot. April, about a 50-50. And then it's when you get to May and June that it becomes more likely than not that we will have a ceasefire. So for anyone who's making a couple pivots and changes into their portfolio, just to get roughly an idea of where people are like legitimately thinking this could end, it does seem to be more of a May, June, July timeframe. But remember, this situation is obviously pretty nuts and it's pretty volatile. So these odds could shift at any point. I just wanted to give you a little bit more context, but please understand, this is a big deal. Oil surges above 100 as Gulf states cut back production. WTI nearly touched 120 a barrel at high. That was overnight. And right now, these OPEC producers are meeting up and saying, hey, should we release some of our reserves? The G7 finance ministers were expected to hold a call at 8:30 to discuss the idea of impact on the war. So we're having some meetings, we're having some chit chats, G7 to discuss joint release of emergency oil reserves. Once again, this is just a classic supply demand issue. So right now, if demand's staying the same and supply takes a hit, well, other people are going to look at a way to potentially bring more supply back online. And that's what the G7 was discussing.
Let's bring in Bloomberg's Stephen Stapczynski now. Stephen, clearly markets are not convinced by the White House, with Halima Croft from RBC saying markets remain acutely anxious. How strong is the sense of panic out there?
Well, I mean, I think you could see just the way that prices reacted over the last 4 or 5 hours, right? They opened early Asia morning. You saw prices surge 25%, oil Brent nearing $120. And then there was an FT report just out in the last hour or so saying that G7 members will be meeting later today, early U.S. morning, to discuss a potential joint release of the strategic oil reserves. And then prices kind of tapered a bit. You're still above $100 a barrel, which is huge, considering where we were just last week, around $70 for Brent. But I think that's what the market has been waiting for, right? They have been, when you hear the U.S. Energy Secretary talking about there's enough oil, it's not so much that, you know, there are some countries that aren't getting the deliveries that they need, especially in South and Southeast Asia. But in terms of oil in reserve and in strategic reserve, that's correct. There is a lot of oil available. It's just whether or not those strategic reserves would be tapped. And we heard.
And right there, I just want to emphasize that's the key point. We, as a globe, have a bunch of oil ready to rip it. It's more of our country is going to want to get into their own supply. So something to point out, I'm a little surprised the administration didn't load up the strategic oil reserve before this all happened. We had the opportunity to top our reserves off at 60 before bombs started flying. Really surprised that didn't happen. But hey, who am I? I'm just a dipshit streaming from my mom's basement. But I do have some good news. Jimbo Cramer has done it again, and this time he saved the world. Just in, Jim Cramer says he does not see a path to de-escalation between the U.S., Israel, and Iran, which for any of you following Jimbo Cramer knows that means the path to de-escalation is all but guaranteed. So I think this is one of the times that maybe we should be applauding him. I think he might have just stopped the world from World War III. I officially believe that Jim Cramer, or I should say inverse Jim Cramer, may have saved humanity. So as much as we've been covering a lot of negative stuff, kind of red, bearish, high tensions, high chaos, high volatility, I want to let you know that there is one force we are not considering that probably saved the entire world, and it's on the screen right now. Look at that smile. He knows he's smiling because he saved us all. He saved the cheerleader, and he saved the world. With respect to major macroeconomic events today, there is nothing scheduled, so you don't have to worry about that. Earnings season is basically over, folks. You might care about Neo, Oracle. You might care about Adobe. I know a lot of you care about Dix. Campbell's. So I'm going to put that out there, but earnings season very quickly calming down. I like to cover this just for earnings season, but we don't have to do that so much. If you haven't already, sign up for the newsletter. It is 100% free. My mom will put it in chat. It's also in the description of the video. Every single Sunday, you get a breakdown of what's going on in the market. Cheat sheet for earnings, cheat sheet for the major macroeconomic events, and then the seasonality of each trading day. And I know the market just opened, but just hang on one sec. Today, the seasonality of today individually does slightly favor the bears. It's quite a new phenomena. For the first 2 decades worth of data, it was flat. And then over the past 8 years, it has been trending down. So I just want to put that on your radar. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. All right, so we have the S&P 500 in the top left, we have the NASDAQ in the bottom left, we have volatility in the top right, and oil in the bottom right. Is this what you guys want on the screen today? Let me know. Do you want the SPY? Do you want the Qs? Do you want the Russell? I figured oil, I figured volatility. This is all stuff you'd be interested in. Is there a particular equity that's going crazy? Do you want to see Bitcoin? Do you want to see what's TSM? Meta, Avago, Apple, Google. We're getting a little bit of a pop out of the gate. There is an upside gap fill. I guess I should let you guys be aware of. I did get tricked by this recently, so I don't want to fall for that again. There's an upside gap fill to Friday's low value. Friday's low value was 6,711.56. So there is a gap fill about 25 points above. So that's about $2.50 in the SPY. We're literally looking at the low value from Friday. You could see it probably a bit better here. Let me just draw that out so there's no questions. It would be 669.66. Once again, it's the low value from Friday. And that was wrong because I was on the weekly chart. So let me get back to the daily. So the low value on Friday was 669.76. On the Qs, it is closer to the realm of 598.33. So once again, we do have upside gap fills. The odds of hitting the upside gap fill is considerably high. Am I playing it today? Absolutely not. Just this type of volatility, this type of craziness. Like, I suppose if you see a super low risk entry and you can get in and get your stop to break even and it's a freebie play, well, I'm going to have no qualms with that, obviously. But it's just, I get the odds. I know that it's nice there. But my issue is this. My issue is that I'm on the wrong freaking chart. 5, 10, 30... 4 hour. So the 5 minute is pushing bullish. The 10 minute should be in the top right. It's not. The 10 minutes bullish. But my issue is this, is the 30 minute is on the struggle bus right now. In the bottom left of your screen, you can see that the 5 minute is above the EMA. These clouds on the screen are just EMAs. That's all it is. There's nothing special. It's a free indicator. You can find it on TradingView, but there's nothing big brain about it. It's just colorized EMAs. So literally, if you like exponential moving averages, maybe this is something you want to consider. But it's, in my opinion, one of the best ways to measure momentum. So are we above or below? So the 5 minute momentum is bullish. Same thing about the 10. The 30 minute is bearish, but it's testing. And the 4 hour is still greatly bearish, like evidently bearish. Let me put myself over here. You can see that it's just the medium time frames, the 30 minute and the 4 hour, are still very, very freaking bearish. So I just wanted to call that out to everyone that I know out of the gate, I'm seeing a little bit of green, but I am not the person buying it. I mean, we saw this fake out on Friday. The same thing happened. The shortest time frames on Friday tried to go bullish. And then as soon as we started testing on the medium time frames, they just got their face kicked in. So I saw that happen on Friday. I'm not saying it will or won't happen today. I'm just saying be mindful of it. And if you think it's about to happen, well, don't get caught up in that trade. Let me switch it 5, 10, 30, and then the 4 hour. Same thing in the NASDAQ. 5 minute is bullish. 10 minute is trying to. 30 minute, it's literally the exact same setup where the 30 minute was bearish and right now it's testing. So it's at that point of equilibrium. I don't know if it's going to break or bust. Obviously, your guess is as good as mine, but I find that when I try to bet on which side's going to be right, I'm generally wrong. So it's easier for me personally just to wait and see which way it breaks and then play it from there rather than betting on the break before it actually happens. So just want to call that out. But anyway, the shorter time frames, the 5 and the 10 are bullish. The medium time frames, the 30-minute and the 4-hour on both the S&P 500 and on the Nasdaq 100, they're bearish. And generally, when in my mind, I do give more weight to the medium time frame just because it's a bigger time frame. So I think it's going to be a better indication of what the trend is. But for me, when I see this mismatch, obviously anyone with functioning, I guess, eyesight can see, unless you have red-green color blindness, that could be a little confusing. But anyway, the fact that these are green and these are red, these are green and these are red, means we have a little bit of a mismatch. And when I have that mismatch, that I quantifiably can tell you that's where my personal worst trading is when there's no clear trend. So shorter time frame trying to do one thing, medium time frame trying to do the other thing. If you look at the larger picture of the news, they have no idea what the hell's going on. So for me, just calm, cool, collected. I don't need to be rushing anything out of the gate, but I do have some good news for you guys. I guess, first of all, shout out to FFN, 40% off, buy one, get one, no activation fee with that code Goonie. They dropped 2 new accounts. So if you've been on FFN before, you know that I'm a big fan of them with their whole buy one, get one. It makes it very, very affordable. But I want to let you know that one of the common pushbacks about FFN is it takes a while to pass the eval. Granted, it was 7 days. I mean, I don't think that's the longest time, but some people don't like that. And regardless, it's kind of a moot point because now they have options for you to get funded in as quickly as 2 days. So if you want to take advantage of this, 40% off. As soon as you buy one, you're going to get another one. You just have to send in your receipt and then they'll send you an activation code. So they dropped 2 entirely new types of accounts. So I just wanted to put that on your radar. Once again, you can read about it here. It's on their website. 2 new accounts just launched at FFN. Express Max, pass in 2 days. Standard Max, EOD model. Both include no exhibition phase, so it's just faster, and contract scaling. 40% off with that code Goonie. And on top of that, buy one, get one, and no activation fee when you pass that eval. So I just wanted to share that. And then also Lucid right here is running a pretty cool deal. 40% off, limit 5 per trader. Once again, code Goonie will get you that. And the reason I'm bringing up Lucid is as of Friday, I did officially get my first payout ever from Lucid. And what I'm trying to illustrate here is not only am I stoked that I made $6,000, well, I guess 5,600, 5,400 because it's a 90-10 split or something like that. But as you can see, it took 3 freaking minutes. So look at this timestamp here. 5:33, I put in the request. 5:34, it was approved. 5:36, the payment. 5:35, the payment was sent, and then I got a certificate. The entire thing took less than 3 minutes. The entire ordeal took less than 180 seconds for me to go from a request, for it to be processed, approved, and the money sent. We're talking less than 3 minutes. Once again, this was my first payout ever from Lucid, and I have to say, just for only doing it one time, very, very, very impressed with that entire process. Very impressed. It only took from 5:33 to 5:36, 3 freaking minutes. Absolutely blew my mind. All right. And we're already fading it. Yeah, this is why I wasn't getting involved in this push. Let me get some of the options flow now that we have a bit of data. To me, looking at the data right out of the gate is kind of pointless just because you're like literally fresh. But now that we have a couple minutes worth of data, let's see if we can get a better idea of the generic trend. What do we have going on here? Mag 7 started to take a hit there at 935, and looking at the S&P 500, we popped for about the first 55 seconds, and ever since then we are trending down. It's people selling calls. It's not really people buying puts, at least as of now. But remember, there's only 8 minutes worth of data, so just wanted to be clear that it's not necessarily the end all be all. All right, we don't need that. Here's the 1 minute. Oil was getting hit, starting to bounce back. I'm curious in the psychological level of 100, what's going to happen there. 5 minute is testing the breakdown. 30 minutes getting rejected. 10 minute has not broken down yet on the S&P 500. On the NASDAQ, 5 minute and 10 minute are still bullish, but the 30 minute does appear as if it was rejected, at least on attempt 1 to go from bearish to bullish. Remember, there is an upside gap fill. That is a fair thing to consider. It's a fair thing to call out. I just want to be, I guess, transparent that the odds of this getting filled are high, but I don't like it when we're talking about the volatility and the chaos of like this concept of war, because if you do it at the wrong time, you could still have a big dip intraday before you can actually like handle it. So just because the odds of it getting filled today are high, that doesn't mean it's going to be happening out of the gate. There's no rule that like we can't dip 40, 50, 60, 100 points before bouncing. So I'm just right here looking at all this negative gamma, the fact that stability is 3%. I just don't really feel that need to rush it today, especially speaking of Lucid, speaking of FFN, right here, and Tradeify right here, FTD, 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 LFF, 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 LFF. I'm pretty close to getting more payouts. So on Friday, from 2 of the Lucid accounts, the ones that are at these top 2, the 163s, I got the payouts from them. They were at 166, so that was where the 6K came from. If I do well today, I could get a payout on these 3. We could be talking about another $9,000 today. So for me, the fact that I'm like this close to a payout and whatnot, I just don't need to be rushing anything. I'm personally just kind of waiting for that, like quote unquote A+, 5-star, 6 out of 5 star setup, because I'm on the precipice of getting more money. And it turns out that half of the reason of why I do this, not only is it always fun to hang out with my digital internet friends such as you guys, but I even do this for making money. So I know that surprises you. I know a lot of you guys tune into the show and you see some of the degenerate shit I do and you're like, Matt he's trying to make money? I know it's a shocker. I know, like, don't give me thumbs down in chat on this one. I know you guys, you might be like, I've seen you do things that it kind of clearly means you don't like money. And I guess that's like a dirty little secret of this show is like, even some of the times it is degenerate, I'll give you that. I am doing my best to make money. Who does not like no activation and fast payouts? Oh, from Lucid? Dude, I have to admit, it is, I mean, I've only had one payout, so I don't want this to be coming off as if I'm trying to give you some sort of like expert advice on this whole thing. I've only had one payout. They've taken at this moment more money than they've given me. So I am net down on it, like just as a firm. Now, obviously, if I get a payout this week and then next week, I'm actually going to be net green on it. I'm not too far in the red, especially that pop I got on Friday of 6K was a pretty nice pop in my favor. It doesn't take many payouts, especially if you're doing max payouts, to get back into the green. So, oh, brother. Oh, brother, oh, brother, oh, brother. Oh, brother, oh, sister. Is this a VWAP retest play right here? VWAP is the white dash line in the bottom around 24,286. I can see from Bookmap that there's a lot of buyers at 350, which we did not tag quite yet today. There's sellers all the way up at 418, something like that. It might be a little early. It might be a little bit early. What are we doing? Oh, the 1 minute, it is getting clocked. The 5 minute is actually now breaking bearish. The 10 minute is breaking on ES. It has not yet broken on NQ. So I don't know. I was really tempted to take this short here around 60, 65 and try to play it to either 300 or 85. But just looking at it, I think I need to give it a minute. I don't think I need to be rushing this one. How do you set up to connect to multiple firms on NinjaTrader at the same time, please? Like literally right here, you just set up the individual connections. I have one for Apex, one for FFN, one for Lucid, one for Top One, Top Step, TPT, Tradeify. You literally just put in your, most likely, you just put in your Tradeivate credentials. I guess technically some of them are Rhythmic, but whatever it is, you just either select Tradeivate, which is Ninja, or Rhythmic, which is Rhythmic, and you just put in your username and your password. That's all you got to do. I mean, if you can do it with one, you can do it with all of them. So if you figured out the connection issue on literally one of them, you figured it out on all of them. I saw your YouTube short. Why do you hate on any other way of trading that isn't how you trade? Eddie, clarify. Which one was I hating on? I've made a lot of shorts. We put out like a lot. Which one are you specifically asking about? I'm happy to clarify. Which one got your panties into a twist? Which one got your panties into a twist? Do I like that? I kind of do. Rejection off of 400. ICT? No, that was someone else. Eddie didn't say it. Eddie, let me know which one bothered you, and I can help you out, dude. Let me know which one bothered you. He probably pays for the class of whatever the short was about. He very well may. I think it was an ATJR setup, and I get that isn't good trader, but he ain't a good ICT representation, but there's good concepts used. I don't know who ATJR is, but okay. I mean, sometimes I feel like I'm bashing my head against the wall because people scream at me that they're like, ICT, it's so good. There's good concepts. But maybe you know what that community is missing? People who are profitable. All the people who are quote unquote profitable trading ICT are people who ended up like being brought into the market from ICT, and then they adopted his trading methodology to suit their needs, as in they dramatically changed ICT and then became profitable. Do you know how many mathematical studies there's been of ICT that if you trade it out of the box the way that he explains it, order filled, you're going to be a net loser? Like TJR. I think I do know who TJR is. I think he's like a younger kid. But once again, like, you're talking about a dude who has never won a trading competition. He's never shown one full profitable year of trading. So this idea of like, oh, like, why are you picking on someone? We all just do it differently. You're right. Yes, some of us engage in the market in a way to make money and others don't. And it just so happens that ICT is nothing but like a scam fucking charlatan. Now, does that mean that everyone who got brought into the market to learn from ICT is a scam charlatan? No, I think some of them, it just so happened that's how they got brought into the world of trading. And it just like, it is what it is. But the one thing that I still like, when I talk about ICT, people get spun up because they feel like it's a personal attack. Why is it a personal attack? Look at your account. Are you net profitable? If you're net profitable, you shouldn't give a shit about what I'm saying. If you're not net profitable, maybe just maybe, I'm actually right on this one. So don't take it as a personal attack. Improve your argument. That's really what you need to do, is you need to say, no, actually, here's the results of my account. I am net profitable. Here's some back testing showing that what I do is actually making money. I'm about to get clocked again on this one. What's the blue dash line is the 50% retracement, which, do I want to give it an extra 15 points? Probably not. I think I need to leave it here. All I can tell you is if ICT methodology were that good, where are all the profitable ICT traders? Like, it's honestly like a pretty freaking simplistic thing, folks. Like, really deeply, truly it is if it's that good of a methodology, why are 99% of ICT traders still blowing out, still net negative? And I've never gotten an answer to that. I've never gotten it. Like, I'm always being told it's the best thing ever. It's so good. It's so great. And then if it is so good and if it is so great, where's all the profitable traders? And then I get some roundabout like BS of like, well, like we all interpret it differently. It's like, oh, so then it's not a trading system at all. Like, if you can interpret a trading system differently with the same set of data, that is no longer a robust trading system. That's called discretionary trading. We already had a name for it. And I guess this is just like the new bullshit way to do it, I suppose. But it absolutely blows my mind that there's this many people falling for such dumb, stupid concepts. And I guess I I kind of understand why people fall for it because we all want it to be true. I mean, hey, I was there too. I bought classes, I watched videos way back when, and you want everything that's being taught to you to be right because that is justifying your time, dedication, and your studying, and you feel you're on the right path to, let's say, like financial improvement or something like that. I get why even quote unquote smart people fall for it, but at a certain point, your own trading results are the scoreboard. If you're trading some dude's methodology, some dude's strategy, and yet you're seeing your account go down and down and down, maybe it's not the market makers coming for you. Maybe it's not the dark pools hiding your trades. Maybe the big boogeyman of the stock market doesn't personally have it out for you. Maybe it's just a bad trading strategy. Like, I don't know. Like, at a certain point, stop wasting your own fucking time. I think he lies about creating the algo, but we sometimes share the same levels for different reasons, and that can't be a coincidence. Yeah, it's because we all know how to look at previous days' highs and lows and swing point. You think that's some big brain thing? Eddie, that's your like big brain thing is because we're looking at similar levels, it must be good. What a stupid fucking argument. I don't know. This is, I guess, just a state of such an extreme lack of critical thought across the board. What a stupid fucking comment. So because we're looking at similar, are you looking at previous highs and lows? Like, I don't know, just one of the most classic things taught to all new traders. It's like, well, if he's looking at the highs and I'm looking at the highs, that must be one smart fucking trader. Must be so stupid, dude. It's funny that I don't mean funny like haha laugh out loud, you should go like do open mic, but like let's think about this. Like truly, let's break this down. So you're confident in who you're learning from because you have overlapping similar levels, but then yet we all know that 95 to 97% of traders end up worse off, as in 95 to 97% of traders shouldn't be doing it, they lose money. So on one hand, you're thinking it's a good sign that you guys have overlapping thoughts and ideas of the market. But then with another piece of information, I could argue that if a lot of people agree on the same thing and we know most people lose in this game, it would inherently be bad to be the person doing the same thing that everyone's doing. Like, and just no one appreciates that conflict, like seemingly ever. They're like, yeah, whatever. I guess it's good. Like, to me, that's just, you're just looking for some form of confirmation bias of saying it's good because we have similar levels. And then you, forget that when you remember that 95% of traders suck? Remember, ICT is a horrible trader. Eddie, here's a question for you. This is just a yes or no thing. This is not like a gotcha. Like, I know, obviously, there's a chat delay, and sometimes it's like, this is hard to go back and forth. Do you believe across his entire career, ICT is a net profitable trader? Just super basic. It's not a gotcha. I'm not talking about selling his mentorships or all the followers he buys. I'm not talking about the social media side of things. I'm saying exclusively for trading. Do you believe ICT is a net profitable trader? No. Then why the fuck are you learning from him? What? I'm gonna fucking lose my mind today. You know he fucking sucks. And yet you're like, that's who I'm gonna learn from. What brain dead fucking society have I entered into today? Oh my God. I've never done brain surgery, but all brain surgeons should learn from me. This might shock a lot of you, but not once in my entire life have I performed a successful brain surgery. But you guys should actually listen to me. I mean, actually, all residents should come from the Kohrs brain surgery program. Don't worry about the fact that I've never, ever done it. Not one time. But they probably should be learning from me on that. Holy shit. All right, so back to the original question of why am I calling out people because they have different styles? I'm calling out people who have different styles who are not profitable, but they're cosplaying as if it is profitable. That's my issue. It's because it's fucking lying. I'm not calling out traders because we see the market and trade the market differently. I'm calling out fucking charlatans who are attempting to make money through a different avenue, whether it's content, affiliates, that type of stuff. So they're putting on this show as if they are profitable when they're not. My issue is with the lying. If someone else trades a completely different strategy and they're making money and they're being honest about it, I don't give two fucks. I do not care whatsoever. Yes, there's a million ways to look at the market. Am I a perfect trader? No. Sometimes I have winning trades. Sometimes I have losing trades. I mean, fuck, you already saw a losing trade from me today. I streamed the entire thing. And hopefully this is a winning trade. I don't know. It depends on if this is going to break down below 300 or not. I don't know how this trade's going to go. I'm never trying to tell you guys that the way I do it is the end all be all best way to engage in the stock market. I don't think there is an end all be all best way to engage in the stock market or the futures market, whatever your market trading. I think inherently there's a lot of similarities between profitable systems such as risk management, discipline, this, that, the other thing. But yeah, the nuances can clearly get different. And because of that, whatever. If someone has a profitable system that works for them, they have a profitable system that works for them. My issue is exclusively in these people lying about it. These people who are reporting, we never got that VWAP touch. These fuckers. Reporting that they have a profitable system and then they're just lying. That's my issue. I don't need him to be profitable if I am. If you're profitable trading the same system as a guy who is not profitable, it inherently shows that you guys are not trading the same system. Like clearly there has to be a difference. If you're profitable, you wouldn't get so spun up about it. Like the one way I know something in this story does not add up is profitable traders. If someone else is quote unquote calling them out or something like that, guess what? They don't give a shit because they're profitable. No one on this planet, if you're like, dude, I made 100K last year, and then someone on Twitter or social media says, no, you didn't. You say, oh, okay, I don't care. This might be a giant shock to you, Eddie, but someone telling you you are or aren't profitable actually does not have an impact on if you are or are not profitable. So something inherently about your story here is clearly just not adding up. For you to get so spun up about this, but then yet you're reporting that you are in fact profitable, something doesn't add up there, brother. Because if you were profitable, you would literally not care about my opinion, like whatsoever on this. It would be a moot point. You'd be like, yeah, I just don't care, dude. So you kind of have to contest with that. That feels like it feels a little bit awkward. It feels a little bit off here. Hang on one really quick. We did see a little bit of a bounce. So here was a bounce in the S&P 500. It is turning south at 957. The Mag 7 catching a bit at 955. The question is this going to screw me over? I'm seeing some strength in the Mag 7 options flow. We're back to 400. Dude, the volatility today. I'm only trading one contract, at least at the moment, and hopefully I could keep it there just because these ranges are already incredible. Already incredible. We're seeing a little bit of life as we're coming to the 10 a.m. hour. Someone said, long already, break even? Hey, you're break even. It's a freebie play. Probably the best way to engage. Dude, these ranges. Look at that bounce. Oil's coming down a little bit. Bitcoin's going up a little bit. 5 minutes still bearish. 10 minutes trying to save itself. This is really what I'm watching right here. 30-minute did get rejected. 4-hour did get rejected. 5-minute is retesting. 10 minutes trying to save itself. 30-minute also got rejected. But 10-minute is bouncing from the breakdown while 30 minutes getting rejected from the breakout. So right now the 10-minute and the 30-minute are kind of in contention on ES and NQ. Like which one's going to be right? Is the 10-minute getting saved or is the 30-minute legitimately getting rejected? That's kind of what I'm looking for. Which way? The Mag 7 is still catching a bid here. It is put selling and a little bit of call buying once again on the Mag 7. Maybe a double top just above 400. Maybe a fake out break of that psychological level. We'll see. We'll see. The 1 minute, or excuse me, the 100 tick went up. The 1 minute cloud is getting rejected on both ES and NQ. Trend hasn't quite flipped yet, but what's really sticking out to me is the 10-minute bar low, which also happens to be the intraday bar low. That's really what I'm watching right now. I would love to get this trade to a break-even freebie trade. I just can't quite do it at the current price level. Well, I'm actually down, so I obviously can't do it. But I mean, this is going to be like a no-duh statement, but if we crack 313, obviously I'm going to break even. But let's see. No, it's just how I appreciate your style of trading. When I see a lot of your style lost money, but you bash the concepts that make people profitable. They don't make people profitable. That's my point. Is if they were legitimate trading strategies, they would be legitimate trading strategies. And if I use them or if I don't use them, whatever. I understand trading strategies are trading strategies. My point with ICT is they're not profitable. What is being taught and what people attempt to mimic is something that's going to lose them money. And I know that because ICT traders are not profitable. After teaching allegedly a six-figure amount of individual traders, when there's less than 5 who have allegedly made money, and then you look into how they did it, and it's because they were first brought into the market from ICT, and then they developed it and adapted it for them, and there's only 5 of those people, and then the leftover 99,000 plus are losing money. That's my entire point. ICT is a scumbag liar. I have more of an issue with him being a scumbag liar than some stupid concept of fair value gaps and inverted fair value gaps, which, like I said, mathematically, those don't work. But the issue is the lying about it. Like, and if that is not clicking in your head, that the issue is like people horrendously lying in an effort to sell their courses, to use their discount codes or their affiliate codes, like I would rather them be honest about it and be like, hey, I'm on my trading career and I'm working on it and I tried this and I'm actually a net loser right now. I'm cool with that. I would actually rather use whatever, the affiliate code of someone being honest about their career, even if they're not profitable, versus a person who is allegedly profitable, but then they're just a scumbag liar. I agree that ICT is the new retail, but that's why the data is awful in our favor. No, not at all. Do you think retail? Okay, think about how stupid of a fucking comment that is that you made. You think that the market makers are fucking with retail, which size-wise is small, and then you realize it's in a sim to funded environment. Most retail traders right now win trading futures, which once again, the amount of retail, even if it was hitting the market, is very, very small, as in it does not really have an impact on liquidity here. So even if it did, but then it's not even hitting the market. So you're saying that ICT doesn't work because it's so popular in the sim to funded world.
Order filled.
Like you're literally arguing that market makers are hunting sim to funded positions, as in not real. Like, folks, for everyone else like, how do I possibly contest with that statement? Like, yeah, no, it doesn't work. Those market makers, they're coming for retail positions, and they're coming for them even harder now because the retail positions are in a simulated environment. Oh, man, people are fucking stupid. I can't believe people, obviously, you're wrong. Even if sim to funded didn't exist, the amount of liquidity from retail to anyone else, it would just be like literally negligible. Like you wouldn't be able to measure it because it's so small compared to actual institutions hedge funds, family offices, insurance funds. Like, it's just retail is literally negligible. And then when you actually realize that most of retail, which is already a small percentage, when you realize that most of retail is SIMDA funded, as in not real. No, you're being pedantic. Now, that's what I said. I'm reading your statement word for word. I agree that ICT is the new retail, but that's why the data is awful in our favor. Okay, I just read it verbatim. I guess I thought I was being generous because you can't type or speak properly, so I was trying to fix the words for you. But now that I read it verbatim, what do you want me to say now? That you actually just don't know how to fucking talk? Like, I literally read your statement verbatim. What the fuck are you trying to say? Wait. Are you saying my 2 micro sim contracts, they're coming for you? God, how do I explain liquidity sweeps? You mean people looking at previous highs and lows? Holy shit. I didn't realize that there were this many fucking dumb people. Like, I heard it. I heard the rumors. I heard the commentary out there. I heard it. Is this going to get cracked again? It fucking is, isn't it? But, like, this is, how do you explain liquidity sweeps? No, you're right. A fucking crackhead cult leader is the guy who invented the algorithm that runs the entire market. And he spent the time coding in the concept of liquidity sweeps. Never before have we seen people targeting previous highs and lows. That you're right on that one. Not that price hunting, specifically ITC concept stops, but 90% of new traders getting into trading loss, and now they trade ICT. Yes, because it's a horrible... The fact that you think those are somehow mutually exclusive is fucking insane. No, 90% of traders doing with ICT are losing because the strategy fucking sucks. You're literally explaining why they're losing. It's because how they're engaging in the market is gonna lose. And then you're like, nah, that's just not right. That's not right, brother. Dude, I would bet my entire net worth you are not a profitable trader. You literally are just too stupid to fucking handle this. Oh my God. So, like, these people, holy shit. Holy shit. A little fake out breakout that stomped me, but Matt, can you explain in a sentence how you trade? Yeah, buy low, sell high. Sell high, buy low. I guess that's 2 sentences. Here's the 50% retracement of the current regular trading hours, high and low. It's 4:20. Oh, we have some buyers there. Do I want this? I mean, I've gotten stopped out twice for no reason where I would actually be break even on both of them at the moment. I just don't feel like taking on an extreme amount of risk today. But had I taken on more risk, I would have actually been perfectly fine across the board. What are we doing? It's funny every once in a while, like these types of conversations where like you're trying to convince someone that their account going deeper and deeper into the red is somehow against them. And I feel like I'm taking fucking crazy pills. Like, you would think one of the easiest things in the world is talking with someone whose account is like net red, and you're like, yeah, hey, maybe you should switch it up. And then they're like, yeah, no, I probably should because I see I'm losing. But there's like some weird psychological phenomena that's going on where even though their account's in the net red, like the people who've been talking and all the people who support ICT, like, dude, we all know you're losing money. Like, it's just the math. And then yet, instead of saying, oh yeah, no, I am losing money, that's a little crazy, maybe I should be switching it up, they, because of the time spent learning it, they don't want to feel as if that money, or excuse me, well, maybe they spent the money because he used to charge, but they don't want to feel as if that was a wasted effort. So I kind of feel for him on that particular
Order
note.
filled.
Like, no one wants to feel like they wasted time.
Order submitted.
And then yet there they are wasting their fucking time. But you would think at a certain point, just cut bait. Like it is a sunken cost fallacy. It 100% is. And I feel for anyone getting caught up in it, but I think at a certain point, you need to be mature about it. You need to be objective about it. And you have to be honest. Be like, okay, I put in time to this. It did not work. That doesn't mean that everything you've learned is like a complete waste, but it does mean that maybe everything you've learned you shouldn't be holding as gospel. Excuse me. I just, the fact that sometimes I feel like I'm sitting here convincing people who are losing a shitload of money that they shouldn't be losing a shitload of money, and they would rather just keep doing it. I mean, you can't. I learned this way back in 2022 with the whole GameStop and AMC is I can't help everyone. Some people are just unwilling to change their ways. I'm open to your ideas, and I've watched you for 2 months. Where would you say to begin study? I actually don't know if I want to help you. You just seem too dumb. I mean, I'll be honest about it. It's not like I have to help everyone in this world. Like, you just seem like a fucking asshole. I am much more willing to speak with people who have an open mind and are like, okay, cool. Like, here's some concepts, what's working, what's not working. I like people who approach it in a like mathematically rigorous manner where they're like, okay, we're going to test it, and whatever the results are the results, and we're going to have to deal with that accordingly. This idea of just like, hey, the first person who ever taught you anything about the market has to be right, and we're just going to be trying to waste time explaining how he's right. I don't give a shit. What I just said was an open mind. I mean, in a certain sense, you are open-minded because you admit that that ICT is not profitable, and yet you're still open-minded enough to learn from him. So, I mean, I suppose you do have a certain type of open-mindedness to you. Like, I'll give you that for sure. Is there an advantage to watching both NQ and MNQ book because there's often divergences and I'm trying to see how to play it? No, they're the exact same thing. If there is it's arbitraged away by high frequency traders. You would never be able to take advantage of it, especially in a simulated environment. Technically, they are independent markets, but because they're measuring the same thing, they should always be exactly at the same value. So as soon as they get a tick apart, it's arbitraged away. So you would be in competition with like literal high frequency traders and arbitrage traders, which unless you have like a decked out setup and you're like trading on a fiber optic cable that's in a black box, you'll never be able to compete there. You'll never, ever be able to compete there. I meant on Bookmap. I mean, I would never look at MNQ on Bookmap. NQ is way more liquid, and it gives you an idea of where big money's at. Like, what's the point of MNQ? Price is going down to 6,500 this week. Bearish continuation lower. This is what I fucking hate about ICT traders is they say dumb shit like that thinking that they somehow have a crystal ball for the market, when literally they're just like everyone else. You're right half the time and you're wrong half the time. Like this idea of thinking, I've never met such a group of dweeby fucking loser people who think they're doing something special. Like, they think they're that guy. Like, they want to behave in this world of trading, like with main character energy, and yet they're the dweeby fucking nerd in the corner going on about shit that is literally just verifiably wrong. Like, what a stupid fucking comment. It's going down. Fucking Mercury's in retrograde, and this is a fair value gap with a PD array, and we're sweeping lows, and look at this manipulation to the downside. Do you know how fucking these people say? It got manipulated lower. You mean trading? No, but this is trading, but then this one's manipulation. You mean people just decided to trade at these levels? They try to like sound so cool and so fancy. It's like this got manipulated lower, that got manipulated higher. Here's a PD array, and here's an inversion of a gap, but then that's also a real gap. But then you forgot that it's Monday and there's a fucking solstice, and that obviously inverses everything. They just sound so fucking stupid. They sound so stupid all of the fucking time about all of this. But hey, I guess if that is what knocks their rocks off for them, here's an SMT. I mean, dude, all this stuff, it's so fucking dumb. And it's all just like regurgitated shit. Like, none of it's new. None of it's original. They like literally took some of the most basic teachings of trading and then just added new terminology, new vernacular to it to make it sound like cool and edgy to sell a fucking $5,000 course. You don't trade moon cycles? Honestly, it's the only thing I trust in these days. All right, I'm watching 400 closely. How much room do I need to fucking give this today? I mean, I keep all of these trades. I mean, they'd be at break even, and then I'm trying to not let my risk get out of control, but then every time I get clocked and like I just keep getting whipsawed, it's enough to tag me out. Oh, this is a lot. What's this risk? The max risk is 2K. Technically, I have enough buffer to handle that, but that doesn't necessarily mean I fucking want to today. Who can be profitable selling courses? A lot of people. I have no issue with the concept of selling courses. I just want the courses to be backed by like, you know, actual factual things and not made up bullshit. I mean, look at the walls behind me. I've read a ton of trading books. Like, the modern day era of selling a course decades ago, we're selling books. Like, hey, with the rise of the internet and education being out there, I'm a huge supporter of it. I have no issue with that. It's just, it seems as if the people previously who went out of the way to write a book also still somehow put in the effort to, you know, like get like real information in there. The modern era, they'll put in the effort to sell the course, but then the course is just fucking gibberish, man. That's my issue with it. Like, this concept of people having knowledge and trying to share knowledge, I have no issue with. And like, I mean, I've spent thousands on courses, thousands on books. Like, hey, whatever. The more the merrier. The more you know, the better it is. My issue is when things are being taught that are just like factually wrong. That's where I have issues, legitimate issues. Someone asked for options flow. What has flow been doing? Let me reload this. Let me look at the S&P 500. Flow is actually kind of coming back a little bit. Showing not really necessarily via price, but via options. It was a 10 a.m. reversal. You can see right here, calls started to get bought and puts have been sold basically this entire time. So that's a bit interesting. Looking at the Mag 7, there was a pop from 9:55 to 10:05. So 10 minutes of put selling, and then since then, just nothing is going on. They're pretty flat since then. Looking at the NASDAQ, Nasdaq is jagged. I guess technically at a delta high reading of the day, but it's kind of all over the map. Kind of all over the map. I'm panicking every day. You and me both. Okay, what are we actually doing here? What are we actually doing? Oil popped back up to what, 104? We're seeing a little bit of a pop. Technically, that's a higher low in the Qs and a lower low. A higher low in the Qs, maybe trend reversal, but a lower low in the SPY. So still the trend's down. Lower highs, lower lows. By definition, that has to be bearish. The Qs have lower highs, but we just put in a higher low. We didn't quite get all the way down there. So by definition, a bit more of consolidation. But by looking at the momentum, 5 minutes bearish, 10 minutes bearish, 30 minutes bearish, 4 hours bearish. So momentum on the S&P 500 favoring the bears. This is why it's right here, in my opinion, of like why this hasn't necessarily been the nicest, the easiest, is the 10 minutes has not broken down. Every single time the 10-minute chart on the Nasdaq, if you're trading NQ, look at tap, 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 tap. Every single time it's getting to the 350s, roughly, buyer step in. So yeah, the 5 minute here, bullish, bearish, but it's pretty much at neutral right now. 10-minute has been saved. It is saving. So maybe that's a note for me of why I should have waited to take any trade, is maybe I should have been waiting for a bit more of a confident breakdown here. 30 minutes bearish, 4 hours bearish. So the 5 and the 10 are very confused on NQ. On ES though, on the S&P 500, things are legitimately bearish. So I mean, I think the NQ is going to break. That's a prediction, 50-50 like opportunity, but I'm just going off the momentum of the S&P 500. Let's look at this flow again. It could be double topping there. Mag 7, it lost it. We just got clocked a little bit. Yeah, I think this will be easier when the 5, the 10, and the 30 across the board all agree. You could be even more confident if the Dow agrees, if the Russell agrees. The more agreement on a particular trend, measurably, we could argue that that trend is a stronger trend. So that's what I'm waiting for. And obviously, I do have a position. You could fairly argue I've traded too early based on the fact that this hasn't actually broken down. I was getting into it when I was like trying to front run it. And obviously right now it did cost me money. And actually even this current trade is down. It's live though. So we're going to see how it actually plays out. But I'm just waiting to see, does the 10 save itself for the 1, 2, 3, 4, 5th time? Look at 1, 2, 3, 4. We just keep tapping and the 5 minute just keeps reverting right back here. Well, now some buyers are stepping in. I'm paying the price for trying to get cute and front running it and creating the position when I thought the breakdown was going to happen, which honestly, this is a good real-time example of why predicting is stupid. I should have just waited for it. I think I was a little bit too enamored with how weak the S&P 500 was looking. It just it broke bearish on all of them, 5, 10, 34, 4 hour. But NQ never really did. And like I said, I was trying to get a better fill. I tried to get in there. And it just, right now, I'm obviously paying the price. Obviously, I still might get quote unquote lucky. Obviously, it could still theoretically break in my favor, but it was not the A+ setup. I should have been a bit more patient with that entry. 57, I would have already been knocked out now at 410, so that technically was already the losing trade. Yeah, it's just a little bit of a disagreement. And actually now, when you have one of these major indices on one side and the other major indice on the other side, yeah, you might get lucky and you might have picked right of which one's quote unquote leading the way. Or it could be completely wrong and you could just get smashed. So welcome to your odds of your 50-50. Which way is it gonna be? Which way? Who is right? Who is wrong? Look at that weird ass pop we just had. The old 1022 monster bar where the Qs ripped, I don't know, $2.50, like it was nothing. $2.50+ Look at that pop. We're just getting gigantic ranges right now. Like absolutely massive, massive ranges. Speed is crazy today. I mean, even oil, look at this. Dump, pump, almost breaks down, huge pop, getting walked down. I mean, at any given moment, we could be getting commentary and update from people in Iran, from President Trump. Like, it's just one of those situations where ranges are massive. Mathematically, it's because we have so much negative gamma. Oh, a lot of support just came in at 6620. I do want to call that out. This is a new position since market open. So you have support at 6620 and you have resistance at 6755. So this is a call credit spread all the way up here, and this is a put credit spread down here. Both of these positions are new as of market open. The 6600, that was pretty much there. The 6580 was also there. So this is a new one. The put credit spread, which is an overbet, neutral to bullish at 6620, and then you have a call credit spread, which is a neutral to bearish bet at 6755. Once again, those were created since market open. Since market open, Bitcoin's recovering a bit there. Oil maybe bouncing off of 100. I mean, we opened at 100. Puked to 97, ripped to 104, 105, back down to 100, bouncing up to 101. It's going to still, like, I mean, all these ranges that we're seeing, I think we end up seeing even more of them. I think we see even more. In moments like these, I really wonder what's the UAE is doing with the 1.5 trillion in their sovereign wealth fund. Probably starting a whole new golf league for all we know. Probably starting a whole new golf league. Oh, is this pop? Is this going to get completely faded all the way back down? Or is this just a little fake out and we're actually getting some buyers to step in now? What to do? What is options telling us? The point of control is 400, as in most volume today has been traded at 24,400 flat. That's a look at the Mag 7. Here's a look at the S&P 500, and it does look like I promise you, when you're having issues, when the 5 and the 10 and the 30 on one thing disagree with the 5, the 10 and the 30 on the other one, ES versus NQ, that's mathematically when we see more of these moments of like choppiness bullshit. So it's actually a really good filter to just be like, nah, dog, not taking any trades, which is kind of what I wish I did at this point. Whoa. If I had real balls, I would have taken another short at 450. Matt, why are you trading today? Why do you trade any day? To make money? That's a kind of a silly question. Week 2 of 2-day special military operation. Yeah. Time is but made up in those. Dewey. Kind of like when they told us it was too weak to flatten the curve and it took 2 years. G7 concluded meeting 10 minutes ago, decided not to release their oil reserve. Well, that explains why oil popped all the way up from 98 to 105. Now I've seen enough. We are officially definitely 2,000% in a recession. 2,000%. Is it too soon to short oil? I don't know. How lucky are you feeling? Do you think you have max levels of luck today? All right. So on the S&P 500, we have lower highs and lower lows. That's still bearish. On the Nasdaq, we have lower highs but higher lows. So that's consolidation. So SPY is technically bearish on the intraday time frame perspective, and then the Nasdaq at this moment is consolidating. Oil's bullish, higher highs, higher lows. Bitcoin's bullish, higher highs, higher lows. Here's a look at volatility. It is all over the map, kind of drifting down a little bit though. So volatility simmering, if you will. Did they open the straight? No. If they opened the straight, oil would plummet. You would see that right away in the price of oil. You would very, very rapidly, like the market would be lit, and you know that before anyone could even update their headlines. That would be a very hot, popular trade. All right, a potential another higher low here in the SPY and the Qs. Kind of watching this. The SPY, the delta high reading is coming off the high at 1025, but it's a lot closer to the high of the day than it is the low of the day. And the Mag 7, that flow hasn't really moved much, but it is, once again, closer to the high than it is to the low. The NASDAQ, choppy, popped from 1015 to 1030, came down, higher low there in that delta reading. Once again, that's for the NASDAQ. Oh, patience. Oil may be putting in a lower high here. Maybe we should be paying attention to that one. Let's get a little bit of some tunes. I'm actually surprised the lack of trendiness today. We've had a very clear, I thought it would be, at least out of the gate, I thought for the first 30, 45 minutes, we would have stronger trends. And I suppose we did for the first 15, and then the trend engine, I suppose, got turned off. All right, let's get some of this music going. This is from Tendies and Tunes, just a little bit of music for traders. It's out there for free. Literally just search Tendies and Tunes. This is called Paper Shields. It looks like it's a parody of U2. Here, let me turn it down a little bit. I don't want to blow out everyone. Before you know it, we're probably going to get sued by U2. All right, which way are we breaking, folks? Ball's coming down. Nvidia recovering. Tesla got hit, kind of going flat. Google recovering. Apple not doing anything. Avago recovering. Meta got hit, now kind of going flat. TSM doing nothing. Microsoft doing nothing. Look at that pump in Nvidia. Oh, which way? We're right at like the 50% of today's range. We're like halfway. We're like, folks, we're just at equilibrium. I don't know if anything too fancy could be done at this moment. We just need to wait. We have to wait for some sort of actual quality setup. I think if we crack 63, 64, where's SPX? Yeah, we just keep finding support. I mean, you can see it right here. We just keep always finding support at 6650. We opened up, sold right off to 6650, danced around it. Just they try to push it down, try to push it up, try to push it down, try to push it up. Like we don't have enough momentum to get escape velocity from this key level. So we're just going to be stuck in purgatory waiting for it to happen. So do I have a specialty prediction of which way it's going to escape? I have no idea. I think that's the poor way to handle it, because I think sometimes you can have a bias that's too strong and then you can't see the opposite if the opposite's true. So I'm just looking at these key levels and I'm just looking for a trend to get created from these key levels. I don't really care if it's bullish or bearish. I guess if I had a magic Harry Potter wand, I would prefer bearish, just because with vol expands, the options are going to get juiced and you get bigger moves. There's generally more money in the downside in terms of active trades. So like it's a bit more fun. But in all reality, I just want a trend to get created. This is struggling to actually get bullish here. Going flat there on the S&P 500, NASDAQ going flat, but both are near their high of the day. How's the Russell doing? IWM pretty much flat. AMD crazy. Apple nothing. Avago did pop going flat. Microsoft did pop holding. Meta nothing. Netflix down. Nvidia nice recovery in options there. Palantir getting hit. Tesla all over the map. Google decent recovery there. Patience, folks. We need tarot cards and a 8-ball. A magic 8-ball, that is. Or I guess maybe at this point, any 8-ball might help. We're just waiting. Sometimes with the market, it's literally just a test of patience. And as much as I really, really thought today would be a nice trend, we're getting big swings, like big ranges. It's just not trendy. Just saying thanks for all the daily education. Goose. Shout out, Goose. That's incredibly kind. I hope you're absolutely crushing it. I hope you're doing better today than I am. At least thus far. You know, there's a lot of time left in the day. Maybe, just maybe, I'll get on the right side of something. Maybe. We're just gotta wait. Starting at 10-12-ish. We did bounce off of it. There's still the upside gap fills. 5-minute and 10-minute are pushing again. 5-minute and 10-minute are pushing, but the 30 minutes here. Are we going for this intraday high? Do I want to bail on my position? 1 minute. We might be ripping to 80 here. That's another key level, or at least it was as of this morning. Yeah, 6680. Let's see. Let's see. Lots of sellers at 500 flat on NQ. Lots of sellers there. We did take out the pre-market high here at 530. We hit a high of about what was that? 495. Yeah, right out of the gate. I mean, we got pushed bearish. It's just buyers stepped in rather quickly. And then fake out. And now all of a sudden, maybe they're getting going. We did take out the high from 1005 on both SPY and QQQ. So that could be representing intraday a change of trend. Just intraday. Obviously, the daily chart's still pretty messed up. But just commenting on from market open till now, we did have lower highs and lower lows, but now I'm seeing a little bit of strength here as the 5 minutes attempting to push, 10 minutes attempting to push. Be careful, though. The 30-minute is still not on the bullish side of things. Looking at the NASDAQ, it is trying to go 5-minute, 10-minute, 30-minute. Oh, messy day. Not one of the nice setups that we look for. Not one of those nice setups. We're battling it out on NQ right at that 500. I can see on Bookmap there's a lot of sellers at 500. They're getting tested right now. We'll see who has more. See who has more capital behind it. Buy calls at 6,666. It's really, really tough to buy calls in environments like this because if you're right and price goes up, vol gets hit, and then you're losing extrinsic value anyway. A lot of retail buyers make the mistake of trying to play reversals from sell-offs by buying calls, out of the money calls, short-term out of the money calls, and it's one of the worst things you could do. I just want to outdo the other guy. Shout out part shooter. It was a devil joke. Well, I think he had one extra 6 in there. But in general, from just like, I guess, a discussion standpoint, remember, part of your value when buying options has to relate to volatility. The higher the volatility, the more juice the premium is going to be. So if you're buying a call after the market sells off, volatility is high. And then if you're right and price goes up, volatility is going to collapse. So even though you're right and you're adding delta to your premium, you're actually wrong because you're losing vega, you're losing volatility. So that doesn't mean you can't play the balance. It means just play it better. You should either do at the money calls, you could do put credit spreads, you could do call debit spreads, you could get similar leverage in the futures market. But buying short dated out of the money calls as a way to say, hey, the bottom's in and I think we bounce from here, even when you're right, that might not be the best product to play it. You'll get vol crushed. You'll get vol crushed. I'm watching this right here. The 10-minute save. Nice bounce, but the 30-minute, is it actually going to break? Folks, we are stuck in purgatory. Stuck in purgatory. Nvidia's going nicely. Oil's going flat now. Vol, speaking of vol getting crushed, vol's getting crushed. But if you're buying at the money, it's relatively short. It makes sense. Nope, there's still better options. Vol can get crushed quickly. Vol crush or expanse doesn't necessarily have to be like, if it bounces quickly, vol can get crushed quickly. There's still better ways to do it. And like you said, at the money is a better way to do it. You could do put credit spreads. You could do call debit spreads. You could do the futures market. There's other ways to structure it where you're not going to be so destroyed by volatility. If I own shares and sell cover call plans to expire, not lose those shares, is delta theta risk or premium? Well, you don't even care about that if you're holding it all the way till the end. That doesn't matter to you. Those Greek values, remember, all the Greek values, all that extrinsic value, it gets, one of the things in that equation is theta. So it all gets multiplied by 0 at the end. So if you're looking at covered calls or something like that and you're holding it all the way to expiration, it doesn't matter. That matters in between, but it just doesn't matter at the end for you. Extrinsic value always goes to 0. Sometimes there's no intrinsic value, or sometimes there's a lot of intrinsic value. But the way options contracts are structured is extrinsic value at the death of the contract goes to 0 because there's no more time. And one of the things in the equation for extrinsic value is time. That's your theta decay. I think do I need a bail on this? I'm really close to getting the fuck out of this. I'm watching NQ battle it out at 500 flat. I need a lucky rejection here. Where are we on this? We still have a bit of distance to go to this next level at 80. If the bulls do push it above and hold it above 80, the next logical test is up here, 6,700. And then the upside gap fill is 6,711. So if you're bullish, which I'm not necessarily saying I think it's smart to be bullish at this moment, but if you are, 6,680, 6,700, 6,711. And then actually a reach target would be 6755. Once again, reach target if we're really following through. I'm just looking to collect premium safely. You could do covered calls safely, but also not safely. Just because you're doing covered calls doesn't necessarily mean it's safe or unsafe. So, I mean, I guess you could argue with covered calls, you're never really losing money. You're maybe just capping yourself on... Wow. You're just capping yourself on profits if you play it wrong. So I guess like in the realm of options, like if you're doing true covered calls, that is like one of the safer things to engage in. Because like if you quote unquote play it wrong, you're just not making as much profit as you could have, but you're not losing money. Well, of course, your strike level is important. I would say for covered calls, that's your expiration date and your strike are the only things that matter, because that decides if you're in the money or out of the money, obviously, on the day of expiration. You might be using the delta values to select what you want to do. I'm gotta close this. I'm like way beyond my risk. I'm just being stupid at a certain point. Really?
Order filled.
Yeah. All right. I closed it. I should have closed it like 10 points earlier, 20 points earlier. I was just seeing if we're going to have a rejection at IB. So the NQ did break to the north side of its initial balance. So that's technically a bullish development for sure. 5 minute, 10 minute. See this, I'm just not necessarily right here. This is the tech sector is showing strength. But I'm just not convinced yet because this hasn't really gone, and it might on the next bar. I think it's possible. And like I said, if we hold 80, you're looking at 700. You have the upside gap fill to 711, and maybe this at any point in here, maybe this is the long to play it for the upside gap fill. That's like completely fair. That's possible, for sure. But just be careful because as you can see, we've had pops from 50 to 70, down to 35, up to 67, down to 50, up to 80. Like even on this trip up here, it could be a very messy one where it's like jagged. Here's a look at flow. Mag 7, bottom left, top right. That is positive for sure. Wow. Just getting... Look at all that negative. Yeah, we can slip right on up to 6,700, 6,710. Right here, this little positive gamma node, this is people most likely playing the rejection of the upside gap fill. Remember, the upside gap fill is 6,711, and then right here you can see positive gamma node at 6,710, the closest strike price. Wow, we pretty much bounced off of the spot gamma implied one day move low, which appears to be 6633. The spot gamma implied one day high is, what is this one? What is this? 6718. So that's a slight overshoot of the upside gap fill. What does this mean? We are finally switching bullish. I mean, bullish and bearish is specific to the time frame you're on. You could be bullish on one time frame and bearish on a different. It might all align, it might not. I mean, it's really, really tough to be bullish on the daily time frame right now. The daily chart looks horrible. Anywhere from the 1 minute up to the 15 minute right now, though, you could argue there's a bullish argument for that. But there's no such, like, you don't live in a vacuum. It's not like there's a vacuum statement of this is all bullish or all bearish. I mean, I suppose there are times where it does all align, but be very careful of saying that the trend switches on the 1 minute. That doesn't necessarily mean you should be switching your bias on the daily. It doesn't mean you should be switching your bias on the 10 minute. It might be enough of a change that you can, but it's not a guarantee by any means. By any means. Wow. All right, so even the S&P 500 got a bullish IB breakout. Wow. It's statistically very rare to create the bottom of IB second. We created the high first, the low of it second, and then we broke the high first. That is statistically a pretty rare thing to happen. Obviously, it does happen. You just witnessed it in real time. But we're talking about a sub 10% phenomena to, once again, create the high of the initial balance on SPY and Qs first, create the low of the initial balance, basically the 60-minute Orbo second, and then we broke the high first. So create the high, create the low, followed by breaking the high first. That's statistically rare. Like I said, it happens about 10% of the time. So is it so rare that we never, ever see it? No, obviously we do see it. We just saw it. But I'm just saying it's not something that you'd be betting on all the time. Definitely not. And we're still just, look at vol getting hit. Yeah.
Jamming at the podium, gavel like a guillotine. Tongue got the power of a detonated mezzanine. Red tie tight like a noose on liquidity. Markets doing yoga, stretching volatility. Dots on a chart looking like crop
Vol
circles.
getting crushed. Oil not really moving. 5 minute is now bullish, 10 minutes bullish, 30 minute. It closes in 8 minutes, but this might be that breakout. So watching this on 30 minutes. With respect to NQ, 5 minute, 10 minute, 30 minute, all bullish, 4 hours still bearish. There is an upside gap fill to pay attention to. Where's that gap? So the upside gap fill on NQ is 24,661. Once again, 24,661. 24661. About 100 points above where we are right now. We're chilling at 6690. Like I said, a logical test is 6,700. People are playing the upside gap fill, 6711. That trade is still live. I'm just at this point, based on the shorter time frame momentum, I do feel good about the upside gap fill. As in, when I say good, I mean I think it's more likely to happen than not today. I'm just thinking, is it going to be a hard rejection somewhere between 6,700 and 6,011? Like, is this the place that it pops up to here? And do we get frozen there, as in like we just chop for the rest of the day? Or is it like a hard rejection and we just puke out? That's a lot of negative gamma. Stability still very low. The flow is positive, but is the flow going to turn off when we get to those key levels, I suppose, is like the real question. Oh, interesting thoughts. The Qs almost got their upside gap fill. Once again on QQQ. The SPY is not that far away either. So that's the key level. I mean, we kind of were paying attention to this on, was it Thursday night? Whew. I feel like there's a lot of time left in this game today. What was this? 24661. That's on NQ specifically. That's the upside gap fill. You might want to set that alert. It's about 100 points above where we are now. I think that would be a pretty likely scenario in the event that we get the upside gap fill on SPX here. Maybe a little bit of a hammer. It's just like, we've seen this before where it dips and everyone gets excited to buy the dip, and then we get some sort of fill and then it just crushes them. Intraday, I obviously can see this 5 minute, 10 minute, 30 minute, maybe breaking there. 5 minute, 10 minute, 30 minute. We have to wait for this bar to close, but in 4 minutes it will close bullish. I'll give you that. I mean, we've just been here too many times where people get sucked into being bullish. We hit a key level. Some people take profits. Other people get a little scared that they see a bit of red, so then they get out, and before you know it, you get this like cascading effect of just like straight selling. So just be careful whether going up or down. Remember, none of this is guaranteed. None of this is going to be accurately predicted with confidence, I should say. It's just, it always comes back to a game of risk and reward. It's always a game of risk and reward. I have made no trades today. I am jealous. I got sucked in thinking that the dump was going to be a little bit more aggressive, and clearly it was not. Speaking of a dump, did something just get announced? That was a drop. What happened? Did I miss something? Was there some sort of 25 minutes ago? That's not right, so that wouldn't be us. It's got bought quickly. I mean, someone just, you could see it here on the 1 minute. Someone was hitting a little bit of it. It might just be trades. It might not be an announcement, but look at that, just a 1 minute candle. I mean, NQ dropped from 580 to 530. We just dropped 50 points like it was absolutely nothing. Brutal. Just like it was nothing. Am I missing any news? Am I missing any updates? Are you guys seeing anything? It looks like the buyers are buying it for now. I mean, it got bought. At least for now. At least for now. A little drop, a little pop. Is it gonna hold though? Let's see. Which way? Well, I guess we can mark out that little dip low. See if people are... This is the extent. We still haven't... It's kind of tough, honestly, in both directions here, because... well, I guess if you went long now for the upside gap fill, your risk isn't too bad, because you could risk like literally this recent low. So that's not too bad. Ball is falling. It's tough to bet against it at this point because we're so close to the upside gap fill that it feels appropriate to wait for that to happen. So if it were to turn right here where we get this close to a gap fill, but it doesn't happen, that's a tough trade to fade it. It's like probably a uniquely tough trade just because we didn't get to gap fill and, you know, so many people are watching him. And it's on a relative basis, it's probably easier to do the intraday long here just because you could use what I posted, like those little blue lines. Your risk is kind of close. I mean, your reward's not necessarily the best, obviously. the breakout trade at 10:35, which at that point on the 5-minute, it was opposite of momentum. So don't beat yourself up if you missed that one. Obviously, Monday morning quarterbacking, it played out well, but like, once again, at that point, it was a little bit of Monday morning quarterbacking. Venezuela's our reserves now. Jesus. What's our time frames? See, I know I sound crazy, but the fact that this 30-minute is not convincingly going bullish, it makes me really nervous about me going bullish. Like, if this was going and we saw green and we saw follow through, I'd be like, boom, 5, 10, 30, bullish, bullish, bullish. I'd check the options flow. I'd be ripping longs with you. I really would. But my spidey senses, folks, they're tingling. What happened to the million? I'm still waiting on Apex. Just no update. Nothing good, nothing bad. Just waiting. It's been about a month now, which, to be fair, does it suck to wait a month? Yes, of course. Like, I wish I had the money in my account. Of course. Like, who wouldn't say that? But just to be fair, on the day that I did the request, February 3rd, I reached out to other people who got large payouts, and I heard anywhere from 4 to 6 weeks, and I'm like right in the middle of that now. Oh, excuse me, 2 to 6. Some of the fastest ones they heard and they found out within 2 weeks. Some of the longest ones went all the way up to 6 weeks. So just to be fair, relative to other people who've been through this process, I am right in the middle of it. So, like I said, I wish I found out the next day, and I wish the money hit my account the day after. Obviously, I'm human. I want the money. But
connection lost.
And now I'm losing my connection. So, of course, I'll let you know when I find out. I just haven't found out anything yet. Just waiting. Just waiting. Hyperinflation and higher taxes coming. Why higher taxes? I haven't heard of any pitches of higher taxes. Oh, brother. Are we going green? We have, I mean, it's possible, but we have quite a distance to go green. SPX still has to pump 50 points. SPY has to go up $4.50. The Qs have to go up. The Qs might go green. The Qs only have $2 to go, which is about 80 points on NQ. Little pop right there. A little bit of a coiling there. Mag 7 is catching a bid. I mean, the Qs could go green. It's just because the close and the low is so close. But right here, $2, 0.4%. It's possible, but I'm a little bit more interested in the gap fills first. With this new Apex structure, does this mean you may be the last $1 million payout? On that account, obviously on live accounts, it would still be true. So, yeah, on the legacy accounts, I might be the last one, obviously, if I get it. Apex filing for bankruptcy so they don't have to pay Matt. No, dude, they're gigantic. I mean, there's obviously levels to this game. They're a multi-billion-dollar company. They are big boys in the industry. Big boys. Wow, I didn't realize it was past 11. Well, folks, I've gotten chopped up a little bit. I tried to take shorts, but momentum broke in the shorter time frames back bullish. I'm watching for this upside gap fill. If it gets rejected there and momentum goes back to being bearish, I'm telling you, I will be taking those shorts, but that's a big if. I don't know if that's going to happen, but that's like kind of the trade entry I'm looking for, is a clear rejection at a key technical, psychological gamma level, ideally filling that upside gap fill. And then from there, I want to see not just a rejection, but a rejection to the point that it actually makes momentum go negative. And then from there, anytime Icarus fires bearish, I'll probably be taking those trades. So right now I'm flat. I did get clearly beat up this morning, but there's a lot of time left in the day. Actually, the Qs are about to get their upside gap fill as we speak in the bottom left there. So that's kind of my plan. That's what I'm looking at. That's what I'm prepping up for. Before I let you go, if you want FFN accounts, they dropped 2 new accounts. You can get approved, or excuse me, you can get a funded account in quickly as 2 days, 40% off, and buy one, get one, and no activation fee. Use that code Goonie. If you want to read about it, they did just post their new accounts here on their FFN at FFN funding account. If you're more of a Lucid trader, oops, I did get disconnected. Lucid, they are doing 40% off with code Goonie, but there are a limit for, this is a pretty nice deal. So use code Goonie, 40% off, limit 5 per trader. I did just get my first Lucid payout on Friday. I thought today was going to be my second one. But based on my current state of trading, definitely not. I'm going to need to make quite a bit of that money back. So we're going to see how that obviously does or does not play out. But anyway, stoked about that. If you want to trade with me, GoonieTrading.com. If you have any questions, comments, or concerns, just go to the contact page and reach out to me. I just need your name, email, question, comment, concern, and I will personally get back to you. Before I let you go, I just wanted to show you that there's still a lot of negative gamma. We have a ceiling at 6755. We have a floor at 6620. Stability is 2%. The S&P 500 was beat up until 955, and ever since then, decent recovery. The Mag 7, same thing, beat up till 955, decent recovery ever since then. We are at the intraday highs as we are getting closer and closer to the upside gap fill. As that is happening, volatility is getting hit, oil's coming down, and you know, just because this trend is happening now, it could persist all day and it could be a huge recovery, or we could get those upside gap fills and it could get murked from there. So I do highly recommend putting those alerts on your charts just to know if we're actually getting the gap fill or not. And then just be careful. Remember, setting your stop to break even is generically a good just like way to manage risk. So if you have a nice trend, ride it as long as you can, and hopefully even what's happening here. All right, that's pretty much the plan. I just want to see the follow through on this. So here, let me pause that for one quick second. The final thing I wanted to say is on SPX, you should be paying attention to 6711. That is the upside gap fill. And then there's a gap on NQ all the way up to 24661. So if you're trading NQ, hey, there's another 75 points in that. And on SPX, there's another 13 to 15 points on that. So I just wanted to call that out. Be careful. Obviously, 6,700, you might see a reaction there. It could be a quick little pop follow through on that. So that's the levels I'd be watching. And then obviously from there, it's just how good is your risk management. That's what I have for you folks. I appreciate all the good vibes. I wish you the best of luck. This is a great time to calm, cool, collected. Pay attention to momentum. Pay attention to your sizing. Pay attention to your risk. And just survive to fight another day. That's what I have for you. I appreciate all the good vibes. We'll be posting content later on today. And then, of course, we're streaming once again tomorrow morning, 9 a.m., bright and early. I hope to see you there. And in the in-between, if you want to hang out in the Goonie Trading Discord, well, that's all pinned to the top of chat in the description of the video. Once again, I appreciate the good vibes. I'll catch you guys on the flippity flip. Peace.
Order filled.